Mike Feroli, does the weaker jobs report and substantially weaker, we thought it was a typo, change anything for you on the economic forecast or the Fed policy forecast?
Not in a major way. I do think it adds some questions about the June FOMC meeting. I think most people were expecting it was kind of a slam dunk that they would start talking about tapering then. I think that's still a firm possibility. We have another payroll report to go before then. But, look, this was a disappointment. I think a previous guest said there may be some measurement issues, which I would, I'm sympathetic to that view. But at the same time, I think there were some indications this was a genuinely disappointing number. And I do think there was some evidence within the report that it is consistent with the idea that there are some constraints on labor supply that may be pushing up wages in the near term. So that does change things a little bit. But I think overall the trajectory of the recovery looks pretty solid. And that doesn't change with one jobs report.
Diane, one of the consequences of that data this morning was a soft dollar, down 0.8% during the session today. What do you make of that? What's the consequences of that for risk assets?
The consequences are for commodity-based stocks and for industrials and any company that exports. It's really a positive sign. So I think that gives us another lift with the dollar declining.
Does it make you think about any stocks that you would normally pay attention to, given the weakness of the dollar and the strength in commodities?
Well, the way our process works is we're always exposed to all 11 major economic sectors. So we are already in energy. We already are in basic materials. If you look at copper, though, an important name has been Freeport-McMoRan. It's been a really strong performer year to date. They used to call copper Dr. Copper. I think it is, even with this terrible jobs report, I think it is indicating that the economy and the global economy is on the mend, even though there are some definite things we have to work through first.
Peter, what's your take with commodities performing as they are, energy up so sharply? Do you want to get exposure to cyclical commodity exposed names at the moment?
Yeah, I mean, certain names I would. Freeport is an interesting name to me, for example. However, as you know, I've been talking about the inflation story and being long cyclical commodities for a while. I think, frankly, the trade is in the late innings. And if anything else, yes, commodity prices are going to continue to go up. But we're going to get a sort of reflexive situation where prices will go up, how much can be pushed through, and how much does that affect demand at the end of the day. Inflation isn't always a good thing when companies can't pass it through to customers and when customer demand falls as a result of higher prices. And we're not just seeing it in copper. We're seeing it in every commodity. We're seeing it in lumber. We're seeing it in chicken. We're seeing it in semis. Semis are leading to higher used car prices, for that matter. So this is how inflation can bleed through into lots of different places in an economy, even in the absence of the COLA wage adjustment to the 1970s. And I think it's something to be very concerned about.
Shepard Smith here. Thanks for watching CNBC on YouTube.